welcome back to my YouTube channel, everyone. I just want to say happy long weekend, and I hope you've all been having an amazing week so far. So today I want to just hop into the charts. Today I'm just going to go over a trade that I took this morning and kind of give you the breakdown of how I did it, what I was looking for, and this is kind of like my model in a sense that it's to me, but I am using ICT 2022 entry model, which is amazing with the fair value gap displacement breakout structure. But I'm also using his silver bullet time frame. So from 10 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time, we're looking for a trade, essentially. So with that being said, cheers. Got my cup of coffee here. Yeah, let's just hop right into the charts and kind of go over this trade I've been looking at. Okay, so here we are on the 15-minute. Basically, this morning when I was looking and seeing what could potentially be reached, what areas are we looking for, considering we had such a large opening range gap or new week opening gap, and we closed it in kind of really slow on Monday because the trading wasn't actually open. So if you go down here to regular trading hours, you can see that we didn't actually trade on Monday. We just opened up from Friday to Tuesday. So that is why it was just this half range kind of day. It was not ideal to trade in, and I didn't trade in it. And we actually closed at 12 too. So, and then reopened again, of course, Monday afternoon or Monday evening, 5 p.m. or 6 p.m. technically, to start trading again. But then, of course, Tuesday came back up, almost took out this high, but we didn't quite take out this high. So I have these daily high, relative equal highs marked up here at 4244. I still have the 25% weekly volume imbalance marked up. This is our weekly volume imbalance that we targeted last week with ICT. We had news today at 10 a.m., the JOLTS job openings, and it is NFP week. So tomorrow and Friday is going to be a little bit volatile, which is not bad, but it is good to just kind of watch the markets. So yeah, new week opening gap. We opened up here, kind of traded around Monday because technically it was closed, and then Tuesday came back up, filled in this new week opening gap again, broke lower, and then kind of just traded in this range. And then this is London's session right here before the open on Wednesday today, which is right here. This is the 1 hour chart, of course, so the candles are a little bit condensed, and because they are 1 hour candles. But I was looking and seeing what price could potentially do. I didn't necessarily have a bias right away because we had already went up to this weekly volume imbalance. And yeah, I just kind of wanted to see where we could go. We could possibly take out these relative equal highs, go back and trade into the volume imbalance a little bit more. We could also trade lower into these 1 hour fair value gaps right here. And then if we're on the daily chart, I noticed that we had this fair value gap right here that could potentially be filled in. So I just marked out the low, daily fair value gap low. I did a horizontal line, extended it, so that's where I'm getting that price from, the daily fair value gap low, which eventually we did actually end up targeting the daily fair value gap low. So yes, beautiful, beautiful, beautiful. Plus we do still have this imbalance from Friday's trading session. So it is a very high possibility that we could have been going for sell side liquidity. So yes, daily fair value gap low, 1 hour fair value gap, 1 hour fair value gap. We could potentially see it drop into this daily order block level, which is maybe my next target after the daily fair value gap low, and then new week opening gaps. So, but we did have a nice run. Anyways, that's just kind of like where the next draw on liquidity is. Bless me. So yeah, we do have buy side and sell side, but that's why we kind of wait and see what the market wants to do, what it's offering, and yes, that's where this opening range gap comes in today actually. So we opened at 9:30. I drew out this opening range gap on the 15-minute time frame, and there was also this 15-minute fair value gap right here. So I extended this out in time. Kind of wanted to see, like, if we are going to go higher, we're going to break through this and close above it, potentially use it as resistance and then go higher. But that wasn't the case. We didn't even take out these relative equal highs. And here's the cool thing. So opening range gaps can kind of be used as any sort of gap, fair value gap, you know. ICT explains it that if we can't make it to the 50% of that gap, you know that it is potentially a breakaway gap or we are not likely to close it in. So I use the Gann box to measure out these levels, and we didn't even come up to the 50% level. So that in itself was a sign, okay, like we're probably going to be looking for sell side liquidity. We're probably going to fill in this 1 hour fair value gap. We're going to fill in this new week opening gap, you know? And then potentially drive all the way down to the daily fair value gap low. So, okay. Now we have our bias. We are looking for shorts in our time frame of 10 a.m. to 11 a.m. Let's drop down again. 5-minute time frame. Okay, so now here's where I really potentially saw the setup was we couldn't close above this 15-minute fair value gap, okay? But it was at 9:45. We had news at 10 a.m. today, and it was red folder news, so it's going to be heavy news. We traded, took out sell side or buy side liquidity right here above this high, took out all these highs, and traded into this 5-minute fair value gap, 50-minute fair value gap. Couldn't get above these highs, but also that was the 50% of the new week opening, or of the opening range gap. So, okay. Now we see this break of structure right here, took out these lows, and we are right at the consequent encroachment of the new week opening gap, of the previous new week opening gap. So then now we drop down, we go 4, 3, 2, 1. We didn't see a fair value gap until we got onto the 1 minute. I do want to point this out too. This morning I drew out the 5-minute fair value gap right here, like this little one right here, because I was kind of seeing like how I was going to play it off of it this morning when we opened. And as you can see, we came up to, like, we used it as a resistance area, came up, took out these highs, traded into the 15-minute fair value gap, didn't make it to 50% of the opening range gap, dropped lower, broke market structure, breaking this 5-minute fair value gap. So this is just kind of like something that I wanted to see what would happen, but it's cool that we came back up into the 5-minute fair value gap, which I will get to in the 1 minute time frame. So 5, 4, 3, 2, 1. Finally, we drop down. We see this fair value gap form right here. It is a little one, but when you know where the next draw on liquidity is and where the market is likely to go, that is really all you need. And a break in market structure and a displacement. I could have used this fair value gap right here. And you know what? I could have, but I wanted to see this low get broken before I use this break in market structure. But I mean, it could have worked. Like, look. But I was using it more as another area of confluence, another area to be like, okay, so we can actually see that the market is being supported or resisted by this price. So I'm going to use this last fair value gap to get into the market. As you can see, it went right there, entered. We're still at this consequent encroachment of the wick. We haven't reached our target, which is that daily fair value gap low. Remember, when we're taking trades, that we want to have at least a 10-point potential profit. So I wanted to see the high of that 1 hour fair value gap first. Boom, 10 points. And then overall, I wanted to see daily fair value gap low reached. So that means the daily fair value gap is completely filled in. And that was 16.75 points away. So we traded into it, took this trade, and we came all the way down to the first 10-point profit, which is the high of the 1 hour fair value gap, and then all the way down to the daily fair value gap low. Reasons why I like this trade is because on the DXY, we actually had this nice run down and then a nice push up, and I saw that and I was like, okay, like the DXY is going higher, so the ES is likely to do what? Go lower, right? I also saw on the Dow, we were trading lower, and then actually we took out these short-term highs on the NAS. So seeing that, and then of course the drop happened too afterwards, was all areas of confluence for this trade. So again, we had a displacement, break of market structure, it comes back into this 1 minute fair value gap, and if you look closely, remember that 5 minute fair value gap that I was talking about? Look at how we trade right back into this 5 minute inversion fair value gap, and it's all within the time frame of 10 a.m. to 11. We have this fair value gap form here, we have this inversion 5 minute fair value gap form, and we come back in, trade into this, come back in one more time, trade into this before taking off, taking lower into my targets. So beautiful trade, really truly beautiful. What I would do now is I would go down from the 1 hour, 15 minute, 5 minute, and then whichever time frame I use to enter my trade, document it, go over it, keep it in my journals, and study it, because this was a great ICT silver bullet trade setup. And we reached our final TP, which was the daily fair value gap low, and look at that, we just come about one tick below it. So truly beautiful trade, and I hope you all learned something from this. I hope you can see kind of where my mindset is, what I'm looking for. I don't overcomplicate it. I don't want to. I'm looking for that fair value gap. I'm looking for that break in market structure. I'm looking for that displacement run. I'm looking for a higher time frame objective, which would have been this 15-minute FVG comes in here, takes this buy side out, breaks lower, breaking the market structure here, and then 5, 4, 3, 2, 1, looking for that fair value gap, having the confluence of it being at this middle range of the consequent encroachment. That's already a level that we look for. Comes back down into the high of the 1 hour fair value gap and the daily fair value gap low. So I hope I could explain that well. Let me know what you enjoyed, let me know what you want me to touch on next, and just kind of let me know what you think of this video. Alright, I hope you all have a lovely rest of your week. Remember that NFP is this week, so tomorrow and Friday is gonna be crazy. So it might just be best to stay out of the markets, but it is fun to watch, I must say. So I hope you enjoyed, and I'll see you all next week. Bye now.